Welcome to the Texas Oil and Gas Podcast, the show dedicated to bring you the news from the oil patch deep in the heart of Texas, with your host, Ryan Ray and Josh Shelton.
And we're back with the Texas Oil and Gas Podcast. We appreciate you tuning in to today's episode. This is episode 207, a Memorial Day special. Happy Memorial Day to everyone out there. I'm your host, Josh Shelton, my friend and co-host, Ryan Ray. Ryan, how's your family doing on this Memorial Day? Y'all enjoying the day off?
Day off. I'm working right now. We talking about day off?
This ain't work, man. This is fun.
No, it's good. It's good. We have some good friends coming over this afternoon. I think you're supposed to come over. Maybe I don't know. You might know that answer better than I do. So I don't know. I think we're hanging out. It's kind of rainy, man. Like we got more rain in May than I think I ever remember.
Oh man, I mean, I looked at the radar. We're supposed to have like 4 or 5 days of rain next week. It's like unreal. I mean, is everybody getting this? Like out in West Texas?
It keeps it cool.
Oh yeah, I'm not complaining at all.
So, speaking of not complaining, Josh, we have a couple reviews that come in. Let me see if I can get it pulled up here. 5 stars, of course, as always. So this is from Simon Bones. Great discussion for Texas oil and gas professionals. I'm glad to have found this podcast. Great weekly discussion with industry professionals about current events and market trends. This is and the next one is from Purple Frog 37. Great podcast, covers all aspects of the industry. You guys have your finger on the pulse of the industry. Appreciate how you guys mix it up and cover all areas, high and low, of the industry. Would be great to get a talk touching on the different operating styles and exploration tactics of small independents. Why it cut off? It cuts off when I read this for some reason. So small independents versus large operators, and maybe how, I don't know. I'll see if I can dig that up. On my Mac, it's cutting it off. So apologize about that. But anyways, I think I know where you're heading. So appreciate the 5-star reviews. If we could get some more, we'd appreciate that. Always helps the show. And let's see here, Mr. Joshua. It's the last May in the last day of May of the month. It's crazy how fast this year has gone compared to last year's just absolute snail pace.
Yeah, man, I can't believe we're already at this point, man. I mean, we're about to hit month 6 for the year, and I just feel like it was February just last week, man. It's just flying by. But things are looking good, man. What are oil prices at today? I've been checking on that. So they're at 67 WTI 67. Man, the market's just kind of hold steady right now. I've talked to several people. One guy was he was over at Schlumberger. Now it's Liberty, I believe. And man, they've been busy, man. They've blowing and going.
Yeah. So far, so good. So far, so good, we should say. And so I talked to someone the other day, and a former guest of the podcast, a recurring guest. I won't say the name because I don't know if he wants it public, but he told me he thought oil was going to 100. And I was like, okay, that's aggressive. That's aggressive. But you know what? Aggressive takes are, we like aggressive takes. So we'll see where things shake out. A couple news and notes here about the podcast, Josh. Speaking of vacation, we do have vacation coming up in 2 weeks, right?
Yeah, we do.
2 weeks.
2 weeks.
So we'll be here this week, obviously. We'll be here next week, I believe. And then the 14th, though, we are out. We're going down to rip a little lip in South Texas. And so that will be fun. And then the 21st, assuming I am moving, for those of you who do not know, and assuming I am moved and can actually function, we'll be back the 21st. If not, it will be the 28th. So that's just a little housekeeping there. I think we have a guest coming on at 10:30, Mr. Shelton. So let's go on and get into whatever else we got to talk about.
Okay, so we were talking about Cimarex and Cabot Oil and Gas. They are doing an all-stock merger. I mentioned on there that for the past 2 years, all mergers, 100% of them that I've seen, have all been penalized on the stock market. Every time, without fail, mergers have been being penalized on the stocks. So I saw this article from Seeking Alpha because I wanted to go and check. Cimarex was actually up 5%, but Cabot was down, I believe, by about the same margin. But Seeking Alpha had an article that came out, and then the title of the article was Cimarex Energy and Cabot Oil and Gas Deal Not Seeing Much Love from Wall Street. And they go on to talk about how, surprisingly, they were expecting to have good results on the stocks, but they're not. I'm not sure if the person that wrote that article has been following the oil and gas industry too well for the past couple of years, just because any type of merger that I've seen has been penalized. But we're seeing that happen now. When I say penalized, they just drop. There's just drops in their stock prices. So there's not a lot of benefit from the synergies that they're actually getting in real time. They're not being reflected in their stock values.
And this deal is kind of weird because it's not two companies that you would have naturally put together, right? You wouldn't have put these two companies together with their positions and what they do and all that. So this one might get hammered even harder because of all that. So, but listen, hey, why are you burying the lead, man? Why are you burying the lead? Let's talk about Chevron, Exxon, and Shell. I mean, let's listen. You got Exxon, who we talked about engine number one on this podcast. I don't know how far back. It's been a while. About how they're trying to get a board seat on on Exxon's, and they got it. They got two board seats. Okay, and then you have Chevron's voters. I don't have the verbiage in front of me. Let's see here. I don't have the vote. Anyways, they have a vote for here it is. Chevron's management was able to succeed in convincing shareholders to approve its preferred slate of directors, but the company suffered a loss on a shareholder proposal to cut so-called Scope 3 emissions by a vote of 61%, according to the primary count. This means that shareholders of Chevron expect the company to somehow control and reduce the emissions caused when its products are used by its customers. That's according to our good friend David Blackman. And then Shell, this is a Dutch court decision ordering Shell to dramatically expand its plan to cut greenhouse emissions. According to Blackman, already one of the more aggressive major oil companies in this area, Shell had earlier this year adopted targeted cuts of at least 6% by 2023, 20% by 2030, 45% by 2035, and 100% by 2050 from its 2016 levels. But as reported by Reuters, the court found the Shell's plan was not concrete and is full of conditions. That's not enough. Mr. Shelton, Big Oil's in trouble. Or is it? Is this good news for Big Oil?
I don't know. I mean, it's hard to say. I think the interest from the guy that wants to see kind of the different type of operations being done by these small independents and bigger companies, that's going to be the question. Yeah.
I mean, I think, we talked about this before, which is the motivations for Big Oil and how they operate are just different than the smaller operators. And so if Big Oil can choke out its competition through legislation, then good for them. I say good for them in the sense of that makes sense. I'm not encouraging it per se, but good, like that's that's how they think about it. So, I think the thing to follow is, and someone pointed this out to me last week, that the activists have struggled to get these legislative matters passed through Congress or the EPA or wherever. And so now they're going inside the boards and just change the boards. And that's kind of the new strategy. Well, okay. If that's true, then I think it's really a double dip, right? Because once you get Exxon to adopt this policy, Exxon's going to do what? They're going to call up Congress and say everyone should adopt this policy.
Yeah.
And Congress is going to say, well, if Exxon's adopting this policy, then everyone should adopt this policy. So it's actually maybe a pretty so if that person's right about they're trying to change the company profile, I would take it a step further, say then the company would take it to the policymakers, and the policymakers will then take it back to the small operators potentially. So that's kind of the concern here, that you wake up 6 months or 2 years or 3 years from now, and Big Oil is the one who is pushing things that small operators can't handle. And that's not a good spot to be in.
Yeah, well, I think it makes sense. I mean, if you see some of the stuff that happened with some of the shutdowns happen for these businesses, Amazon was pushing for $15 minimum wage. They were pushing for some of this because as a company, they could handle it better than some of these smaller companies could. They know that if it pushes the competition out at that point, they can start being a little more flexible with their prices and get that money back and have all that market share.
Right.
And
Just to be
that's
clear, Josh, that's a good point. There's no law that prevents you from setting your own internal minimum wage, right?
right.
So Amazon can set their own internal minimum wage. You see companies do this at 15, 20, 30, 40 bucks an hour, whatever it is. They could do that, right? Nothing stops them from doing it. When they push it outwards, what they're trying to do is cut the competition off there. So if
Right.
Amazon wanted to say, we will not hire anybody for less than $25 an hour, they're going to scoop up a lot of folks. I mean, they are, because that's a good paying job, $50,000 a year, right? But the companies who can't afford that, they will get the 25 to whatever the minimum wage is, $7 or whatever. Those guys. But then Amazon comes in and says, no, sorry, you had to pay what we're paying because we're paying it. Then all of a sudden you put this enormous pressure on the small guys. And this is, don't get on the minimum wage rabbit hole, but it's quite frustrating because everyone talks about these big companies. Well, these big companies are not stopping. They're not stop. No one's stopping them from making their own internal deals, and some of them do it, but they push it out. So,
yeah, very frustrating. But you see that happening here, and I think that's going to put a lot of pressure on some of these smaller companies. Hopefully, the legislators in these different states are more savvy to it, and unfortunately, Ron, I don't see that being the case. Anything that's pushing green, especially in the current administration, is going to be it's going to be backed by the government, I think, and it's going to put enormous pressure on those smaller producers.
absolutely.
All right, Ryan. So a couple of things. So one of the things that we've talked a little bit about is when the market started focusing on returning cash to shareholders. That really began a major shift in the industry. This was probably, I guess, 2.5, 3 years ago. This became a major topic, and a lot of these companies started being evaluated differently. And so now, as they're building out these portfolios, companies are changing the metrics by which they measure the success of a company. They want to know, how long will it take for you to cash flow? How much money will you make in a certain amount of time? They're not looking at how much oil will be produced per se as the major metric. It's how much will it cost you to produce the oil, and how much money will that oil produce in a certain amount of time. And that has caused the rig counts, according to this article from MRT, to decrease tremendously. So there's a lot going on. You may contest some of it, but that shift to bringing in a profit to the shareholders has certainly been something that we've been watching for a while, and obviously the pandemic didn't help that in any sort of way. So
No, you didn't make any money last year, so but the prices have to stay high. And so if the prices will just stay where they're at. And listen, I will put this in the show notes. We had on last week on Inside the War Room, Mark Rossano talking about the economy. And so for folks who are interested in that kind of stuff, I'll put that in the show notes, and you go check out Mark's and my conversation about economy, oil prices, and why the price is actually, from our perspective, a little bit high. And it has to do with where the storage is at. It has to do with what's actually happening when you look at how the market's being traded. And I would refer you to one other person on Twitter, Big Oren, who covers this. So the price is high now. It doesn't matter what you think. It is high. It's good, but I think it's a little bit overinflated. And let's see here. I think our guest is in the waiting room. Ben, give me a thumbs up if you're ready back there. There he is. Let's bring him on. Okay, get him on the big screen here.
Morning.
There he is.
morning, Ben.
How are you guys doing?
Doing good. How about you?
Good. Loud and clear.
Yeah, sound great. So you've been on the show, I think, maybe a couple years ago. Why don't you introduce yourself? You have a new venture you're talking about. So a little bit about yourself and what we're going to talk about today.
Sure. Yeah. So I was on, I think, a year or two ago to talk about Ware, which is our sister company. So Ware is a product that we built. I guess we launched about 7 years ago, back in 2014, which is a cloud-based mineral and royalty management platform. And that has grown, from a couple of us to we've got about 25 employees on that side. And our client base dramatically sort of shifted from the first day that we launched the product. As you can imagine, our solution was pretty much only satisfactory for the small mineral and royalty owners. And as we brought on some capital, we ended up moving more and more into the bigger institutions. So think of like your nonprofits, your bigger family offices, universities, hospitals that own minerals, that sort of thing. And for the longest period of time, we kind of stayed out of the mineral aggregating space, meaning these bigger mineral buyers obviously need a platform to help them manage sort of what they've acquired. But it's a lot more, they need some kind of more sophisticated bells and whistles, if you will. And so we sort of stayed out of that space for a while. And in the last 2 years, we made a big push into that market. And as we've done that, the general feedback has been, hey, we love Mineralware. It's a great product, but it'd be really great if we could actually buy and sell properties online. And so that was sort of the genesis of Energy Domain, which is our new venture. So it's essentially a online transaction platform for oil and gas properties. More specifically, upon launch, it's going to be minerals, royalties, and non-operated working interest.
Okay, well, you covered a lot of ground there. I was actually, Josh, I don't know why you weren't invited, but we won't get into that. I was actually able to see I don't know, beta version is the right way, but a pre-launch version of this product. Josh and I both had some experience in the real estate background, and this is kind of like a mesh of Zillow and I'm going to say this, and I'm going to fix it. Craigslist, but it looks 1,000 times better than Craigslist. But it's kind of like a Zillow meets Craigslist, all in the 2020.
Yeah,
that's it. Craigslist is built in 1990, so don't take the old look, but it has the ability to go and look and zoom in, and see, just like if you're looking for real estate stuff on Zillow. But you can do more on Zilloll. All you do is look. Here, you can actually go through the process to vet the deals. And I mean, some of the features you guys have are pretty slick.
Yeah, I appreciate it. Yeah, I would say it's a pretty good combo of like Zillow, eBay, and Craigslist, like you said, or much
eBay,
more up to date version. I appreciate it. The whole general concept for us is bringing a more up to date solution to the market. Obviously, there are a couple other groups out there that are similar. We felt like we could apply a lot of the technical expertise we had developed building Mineralware and apply that to this new marketplace concept. And so the big keys for us are sort of streamlining the process of creating a listing. So you're actually even opening this up to mineral and royalty owners as well, beyond just professionals transacting. And then also on the buy side, providing the buyers all the tools they would need to actually conduct their due diligence on the deal directly on the platform. So most other companies or any other online transaction platform, or really any transaction platform, you're kind of a buyer's going to a particular deal and they're looking at a virtual data room. They're looking at deeds and check stubs and all kinds of information that they're going to use to conduct their due diligence. But they end up going to all these other data platforms to kind of vet out the deal, whether they're looking at permit or activity or production data. And so we're actually providing all that in one solution, and it's completely free unless you obviously transact a deal. We collect a commission.
And before we go further, you guys are licensed and all that jazz. So it's not.
Yeah.
People hear like, whoa. So maybe, but I know you have I think Series 7 potentially. What do you have?
Yeah. So we have our own broker dealer. So not to get into the weeds on securities law and stuff, but yeah, we are a licensed broker dealer.
Okay. Well, yeah, for those who are listening who goes, I'm not too sure about this. This is all
yeah. So yeah, it's actually funny because we've had a few folks. So to kind of step back a second, we opened up for registration 2 or 3 weeks ago, and essentially what we're doing is we're collecting all of our buyers in a hopper. and setting up deals on the side simultaneously, just so we can establish that critical mass on both sides before we push all the deals live. And we have actually gotten a few folks that push back, because we collect a lot of information up front. As a broker dealer, we're asking social security numbers, EIN, stuff like that. That's all to verify identity and run it through all the proper anti-money laundering and terrorist protocols and all that. Obviously, if I could just collect your email address and your name, I would do that. It's not like we're trying to collect your information. So that's, Facebook has kind of ruined it for a lot of people, because they think that we're just trying to steal people's data in some case. But a majority of folks are very understanding, and they know it's something that we just have to collect. But you're going to get that small percentage of people that just aren't going to share their information, no matter how legitimate or federally regulated you are.
Yeah, so what are y'all seeing right now with mineral values, like in West Texas, New Mexico, or like these private owners that are trying to sell? I mean, has the market been really tough here in the last year, or have things continued pretty steady?
Well, so we actually were going to launch back at NAPE of last year. Fortunately, we did not. The good news was we didn't miss out on a lot of deal flow in 2020.
Right.
So, I would say that 2020, all that did was it didn't really lower sellers' expectations as much. And that's pretty much the norm, just because mineral owners, they get one offer in the mail, whether it was in 2018 or 2019, depending on what the market was doing, it really doesn't matter to them. They see that number one time, and that's what it's worth in their head. So in 2020, sellers' expectations remained the same. Buyers just got even further and further away. And so that arbitrage, I think in the last few months has definitely gotten a lot more realistic. So I think the bid-ask spread is a lot more realistic today. But yeah, absolutely. I'd say, West Midland Basin, Northern Delaware, which is no surprise, are going to be our more expensive properties right now.
One of the questions I get often being is, like if someone sent me something and said, "Hey, is this a good deal or not?" Right? And how do I find out if it's a good deal? It's like, well, I don't know. I'm not a geologist, But your guys' site, when I went to your office that day, you're pulling up like, hey, here's so if someone sent you some acreage in this area, you can go to your site and you can actually see the acreage. You can see the existing wells. You can see the logs. Like, maybe unpack that. So this is the thing that impressed me so much was not the transaction side, because that's very clean and cut, but the ability to do due diligence, as you've kind of talked about some, but you can really get a lot of information off the site, and that's going to be helpful. And so it's going to be a deal where I think you guys will see a lot of people going to your site as a tool, as a resource to kind of get familiar with stuff that they're not sure with, and of course they'll eventually probably convert to leads at some point.
Yeah, absolutely. So like I mentioned a little bit earlier, anytime you're transacting a royalty deal, mineral deal, non-op, there's a lot of different hoops that you have to jump through to evaluate it. So for us, although we do have a broker license and all that, we are trying to be a pure play exchange. So we're not going to provide valuations or anything like that. Ultimately, every buyer is going to use their own valuation, their own models for any deal that they're looking at. And so what we're trying to do is get these buyers as far up the hill when evaluating the deal as possible. And we use that just aggregating all the public data. So anytime that you're looking at a listing, well, when I say that, public data, but also the listing specific data. So when a buyer is looking at a deal, they can see all their check stubs. So anytime a seller puts a deal on our platform, instead of just putting PDFs of check stubs or scanned images of check stubs or JIB statements, joint interest billing statements, we use a lot of the same technology we built for Mineralware to digitize all that check stub data and the joint interest billing data, so that a buyer, let's say, especially nowadays, buyers are looking at they're really not valuing as much upside as they used to. So it's a lot more straightforward, and they're looking at PDP. They have a very specific model that they use, and in order to sort of pull data into a model, they need the data in a format that's easily ingestible. So all of our check stub data and JIB data is very easily ingestible, where a buyer can move that into their model. But also from the public data side, with our partnership with Mineralware, which is another company under our umbrella, as I mentioned earlier, we are aggregating all of the well data, permit data, and production data from every producing state in the country right now, just like any other big data vendor is. And we're providing that to our users for free. So when a buyer is looking at any deal on our platform, they can see all the tracks that are part of the listing. They can see all the leases. It draws a 3-mile radius around the listing, and it populates all the public data. So instead of paying for an expensive, data subscription in order to evaluate a deal, it's all completely free directly on our platform. Obviously, we have to draw kind of a radius around it just so people don't use it as a free version of any other data platform they would pay for.
Yeah, and that's what's really, in the oil and gas industry, we always talk about how, we're behind the data curve, but guys like you are kind of pushing that envelope, saying, okay, we can, we can compete with other industries, and we can kind of have the sexy technology, if you will. And so it's kind of good to see, because if you were to just take this and take energy out of it and replace it with something else, it looks like any other app that you'd find looking for homes or whatever. And Zillow's obviously a huge company, and y'all's app looks just as clean as theirs does.
Sure. No, that's a good point. And another thing to keep in mind too is that because we're opening this up not only just to sellers that are not professionals, we're also opening this up to buyers. And when I say not professionals, these are family offices or wealthy individuals that want energy exposure, whether it's buying minerals, royalties, non-op. Eventually we're moving into operated working interest as well. But they don't have the ground game, number one. So we're bringing the deals directly to them. But then number two, they don't have the infrastructure or the need to pay for these other expensive data subscriptions that they would otherwise pay for in order to evaluate deals. And so we're making that completely free to them, which again, just ultimately opens up. So anytime somebody lists a deal on our platform, we're opening that market up to this whole other pool of buyers that traditionally don't have those tools to evaluate deals.
Yeah. So let's unpack that here a little bit. We have kind of small operators, large operators, and then people who all listen to our podcast. Maybe walk us through what is your expectation? Are you guys, if they list, is it an exclusive deal? Can they list on other sites? Maybe how does the listing side go? Or is there limitations on, they can list deal A on your site, but then deal B that's not related can be listed somewhere else? Any kind of restriction, stuff like that?
Yeah, so our exclusivity is strictly on a deal by deal basis. It's not a relationship based, meaning, when you first create your listing, you can either do it yourself, you can leverage us to help you with it. There are a couple different options. So instead of pigeonholing our sellers into an auction process, we also give our clients the ability to create what we refer to as a negotiated sale listing. So we have a lot of sellers that have said in the past, I don't need to divest in the next month, but we're looking at divesting this asset in Q3 or Q4. But if you're telling me that I can do a negotiated sell today and somebody's willing to just make me an offer, kind of like a make me move type concept, with Zillow, they can negotiate the sale directly on our platform. So there's a couple different options, but they can also, in addition to that, add in a buy it now price as well. So we've had a lot of buyers tell us in the past that there might be a buyer that has, a big acreage position. I'm just, for the sake of simplicity, I'll give an example. A buyer's got a big position in Haynesville, and there's a seller on our platform that has put, there's some bolt-on acreage that would fit really well into this buyer's existing acreage. And let's say that particular acreage in the Haynesville, they have a very, very low cost basis. And they would be willing to pay this elevated buy it now price just because it fits so well into their existing acreage. And at that point, it's really just, even though they're paying they're paying an elevated price to the buy it now, it's actually still leveling out at a relatively low cost basis as you average it out throughout the portfolio. It's giving our buyers some flexibility as well, because they can go ahead and take it off the market if they want to. They're not forced to kind of sit there and go back and forth through an auction the entire time.
And then on the buyer side, is this for people who are just getting into minerals, or do you need to be a more sophisticated buyer? Do you guys kind of have the ability to bridge those folks who are new? Who are you trying to target on the buy side? Because it's so clean that anyone can use it, but it might not be for the beginners.
Yeah, no, that's a great question. All of our buyers have to be accredited investors. We also do ask, a bunch of suitability questions. You will need to have experience in oil and gas. And so we do get to know, it's all your kind of know your customer type of roles. And so we do vet out all of our buyers. So yeah, it's not just for everybody per se, but we've tried to make it as easy as possible so that anybody could use it. And I actually meant to touch on this earlier as far as you guys asked about exclusivity. So anytime somebody lists a deal on Energy Domain, it's exclusive as long as the deal is on the platform. And then there's a trailing 30-day period if they pulled the asset off the platform. Now, if a buyer learns about one of our sellers' deals on the platform, there's a 1-year exclusive period at that point in time. So if they actually make the connection and also learn about the asset, then it's a 1-year exclusivity.
Okay. I think final question here. Is it possible to list an asset that maybe has no real value, and a couple bums run it, and it's just a bunch of talking? It really doesn't produce anything, but it's more podcast related. Can we take this? I'm asking, can we list this podcast on the platform? Like, can we take this, list it, overvalue, and get an exit? Is that possible? We're looking for the exit. Can we get the exit?
Yeah. So, what we try to do, even though we are like I said before, a pure play exchange, there is a level of due diligence that we do before deals go up on the platform, just because ultimately it's such a small space that people talk.
No,
and
John.
if you're throwing a bunch of not your podcast, but there's some assets that people have tried to throw up in the last few weeks that don't make any sense for what we're trying to do, and it's just going to give us kind of a bad name. So there is a level of due diligence that we do on the front end as well.
So that oceanfront property that Josh and I have in Arizona is not going up there either.
We are looking at eventually getting into other spaces as well. We're trying to stay pretty laser focused on oil and gas, but you never know. I think there are some real estate applications as well long term. So maybe awesome. You guys will be in luck.
There we go. Okay. Okay. So the website is energydomain.com. If you can't spell that, you can't be in the energy space. I'm just going to leave that alone. Energydomain.com is the website. Ben, it's good to get you on this Monday. Thank you for hopping on with us. Anything else before we let you go?
Yeah, I meant to mention. So as I talked about this very briefly, but we opened up for registration 2 or 3 weeks ago, and we're pushing everything completely live June 15th. So if you're interested in signing up as a buyer, just go ahead, or a seller, just go ahead and go through the registration process. That way you're ready to kind of see deals day one.
And the buyers have to be accredited. If you do not know what that means, just Google it. But the sellers don't, obviously, because it's theoretically possible you could have stuff to sell and you're not an investor. So the buy side is accredited. The sell side, as long as you have a viable asset, get in contact with Ben and his team over there at Energy Domain. Okay. All right. Well, thank you, sir. It was good to have you on, and best of luck to you guys as you move forward.
Thanks, Ryan. Thanks, Josh. Y'all have a good Memorial Day. Take care.
You too, all right, Mr. Shelton, what else?
All right. Last couple things for us, Ryan. Number one, Hart Energy had an exclusive about OPEC Plus likely to stick with their policy. So they're gradually easing oil supply curbs, and that's what the expectation is for June 1st. That is tomorrow. That is a meeting that I think a lot of people in the West Texas area should have their eye on. That could have some impacts on where we see oil prices. So the expectation is they're going to continue that, and so we should see prices stay where they're at. But that would be what we need to confirm. I think it's tomorrow.
Yeah, I think you're right. And we do not have Energy Week this week. Dr. Wald is out, so we'll be covering that next week on the show, I'm sure. Mr. Shelton, now we can't break this news yet. You know what I'm talking about. I got some news this weekend that was kind of interesting. So hopefully we can break that news. But that will be an interesting conversation for the Texas Roundup when we can talk about that deal here, hopefully in the next couple of weeks. But with that, I hope everyone has a great Memorial Day weekend. Or hope you did by the time you heard this. And until next time, keep